right, welcome. Appreciate you being here. It is Wednesday morning. I was jamming along working on a project and I was like, oh shoot, the webinar's starting. So let's launch in and get that going. Welcome, John. Appreciate you being here. I'm gonna share my screen. All right, give people just a moment or two to come on in. Hey, Mateo, glad to have you here. Drop in the chat if you don't mind where you're hailing from, where you're dialing in from. Let me make sure that the chat is boom. There we go, activated. So yeah, just let me know where you're dialing in from and say good morning and say hi. So I am going to share my screen and we are going to get started. So let me know as well. Give me a 1 if you can see my screen and still see my bald head floating somewhere on the screen as well. Awesome. See you driving. Awesome. Well, be safe. Be careful out there. I just want to real quick, say something. Man, the fires going on in Southern California. Thoughts and prayers with those poor folks. If you know of anybody that's affected, just hope I have friends down there and hope everything's it's a nutty, wild world we live in, right? 2025 starting out with a bang. All right, guys. So we're gonna launch in, and today we're talking about S-Corp Optimization Day 2. And as I always say, worst thing on the planet is to have your time wasted. Our goal, hopefully, is that you will find value in what you hear today. So grateful that you're spending some time with us. Let's focus in as much as we can. I always say let's act with fire, and accountants like acronyms. So here we go. FIRE stands for, in the Make Taxes Fair world, focus. So you're busy. The demands on your time are many. There's nothing small about being a small business. I hate that term. I know it's an economic term with the SBA and the government and everything, but nothing small about being in business. So appreciate that you're here. Let's focus in. My goal is to give you things that will help you see the impact, right? We're talking about tax savings and tax saving strategies. And, taxes are death by a thousand cuts, right? They get you here, they get you there. We have income tax, which is what we're focusing on. We have property tax, DMV, sales tax, all these things. So, let's show you the impact of how one strategy can help you save 1,500 bucks here, 4,000 here, 2,000 here, and it all adds up. I just helped a guy yesterday. We found him over $53,000 in tax savings, and we're capturing it kind of on a bridge, capturing about 18, 19 grand from 2024 that we can still implement for him. And then 2025 moving forward. So between 2 years, $53,000 reduction in his taxes. That's a fairly significant impact, and he's pretty excited, which we're excited about. So once we focus in and understand impact, then we're going into, let's review. What do we need to do to take action? So we'll give you some tools and resources, and the goal is to get you to a state of efficiency. So that's our FIRE acronym, right? Who am I? Chris Middleton, husband, father, tax strategist. I've been doing taxes for almost 20 years. I've morphed into more of a strategist over the past probably 6, 7 years. But like you, I'm a busy business owner, and again, grateful that you're here today. So what's on the docket? We're going to do a brief introduction. We got some new people in the room today. So we're going to tell you a little bit about who we are and our philosophy. We're going to do a quick recap of yesterday and where you can go to find the replay of the webinar yesterday if you missed that. Then we're going to launch into board of directors. So what is a board of directors for your S corporation? And we're going to dip a little bit into a bonus topic. We're going to talk a little bit about tax optimized travel. Help somebody, again, yesterday, turn some vacation. Just to be clear, vacations are not tax deductible. Travel can be, right? So we showed him how to kind of take some time away from work in a strategic way that is very legitimate tax travel wise. So that we'll dip into that a little bit. We're going to talk about the accountable plan and what that means for an S corporation. Again, if you're here live and you stick with me to the end, we're going to have some bonuses and special offer type things, and then we're going to give you a sneak peek at day 3. So, make taxes fair. Who are we? What is our philosophy? We believe humbly that the tax system is broken. And here's why, right? That is a visual roadmap of the IRS the taxpayer roadmap. This is produced by the IRS and is supposed to visualize the tax system. What a mess, right? That's not a roadmap. I look at that and I say that's a rat's nest of confusion. That's the government. It's a system of confusion. And yet we see in the headlines, right? Companies, politicians, big companies, billionaires pay little to nothing in taxes sometimes. And how do they do that? Like, how do they make that happen? Well, they are fighting back with a system and they have people that they're paying to fight back. The average Joe business owner, right? You and me, the struggle is we lack the time, energy, and desire. I always say, I have the dad bod, but I know what I need to do to get rid of the dad bod. I just don't have the time or don't make the time or I lack that energy and desire, right? So, how do we help busy business owners who believe this? They're like, oh, my CPA has me covered, right? Every busy business owner ever is like, oh, yeah, I got my guy. But like the guy I talked to yesterday, where we're finding him over $54,000 in tax savings, it's about a 43% reduction in his tax bill. He was like, yeah, my CPA didn't have me covered. When it came down to it, we didn't meet like he said we were going to do. We didn't do the things, and I was left kind of holding the bag. He was frustrated. He's like, what do I do to get rid of this tax bill that's huge? He's paying over $100,000 in taxes. And he's like, this is too much. Felt like too much. And the reason is most CPAs are what I would call respectfully, I'm not trying to disrespect the profession that I'm a part of, but most CPAs are happy historians. They put the right numbers in the right boxes, not much in the way of proactivity. So it's a reactive versus a proactive state. So that's where we're different. We help, again, I hate that term small business, but we're here to help small business owners of America with a tax reduction system that's designed to cut your tax bill by 30 to 50% or more without the fear of audit or jail time. And how we do that, very proud of that. This is something that we call the Clear Edge framework. And the Clear Edge framework is this. I'm not going to read it to you. You've got eyes and are educated and can read. So at the end of the day, we're tackling the pillars of tax planning. And today we're diving into legal structure because S corporation, if you have a corporation, opens the door for some tax strategies. We're going to be talking about a little bit about employees and then mostly on deduction optimization. So let's dive in and get right to it. This presentation, FYI, is for education purposes only. This is not legal or tax advice. Legal or tax advice is when somebody sits down with you that's a qualified professional and says, what's your situation? And says, how can we make this fit or does it fit with your specific case, right? So the goal today is to just open your eyes, give you some resources and put you on the path to tax savings to dial in and say, how does this specifically apply to me? Okay. So yesterday we talked, who put in the chat, put a 1 if you jumped in or tried to jump into the where the replay is for in our school community. Drop a 1. Awesome. Drop a 2 if you have yet to do it. You're like, I'm excited to do that, but just didn't have the time. No worries. So I'm going to show you the resource again, and you should be getting emails follow-up if you registered for this webinar. You should be getting some emails. So yesterday we talked about business foundation, right? There is no such thing as an S-Corp. There's an LLC or C-Corp. So if you go to an attorney and say, hey, I want to form an S-Corp, they're going to say, cool. Which flavor do you want? Do you want an LLC or a C Corp? Because you take an LLC or a C Corp and you make an S, what's called an S election. So we also talked about sole proprietors and we showed LLC sole proprietor, the tax outcome is essentially the same as far as tax burden. So we illustrated the tax burden of a LLC and sole proprietor and a C Corp and how the S corporation can say S election can save substantially in tax dollars. So we illustrated that. We talked about some of the maintenance requirements, right? Is the juice worth the squeeze, is what I usually say, right? If you have to jump through some hoops to create a corporation, and the common complaint I get from new corporation owners is like, oh my gosh, there's so much to do. It's like, yeah, it's a new kind of the new normal, but we put together what I'm very proud of, probably the best that I've ever seen. I legitimately looked at a few lists and resources, and we put together a checklist of things that you need to do on a annual, quarterly, and semi-annual basis, right, to maintain your S corp. We also talked about the reasonable compensation requirement. I showed you a compensation study and how to accomplish that and not overpay yourself in W-2 wages. And we gave again the S-Corp Optimization Guide and a reasonable, those who attended live yesterday. Let's connect. I have that screenshot. And after this webinar series completes, I'll be reaching out to you to say, hey, would you like your complimentary compensation study? So that's a recap of yesterday. You can get those resources if you go to maketaxesfair.com/community. If you want to take a screenshot of that, that links right into our school. It's SKOOL. That's an online platform. It's in the school community and in the classroom setting. So any questions there, comments? You still with me? Drop a 1 in the chat if you like Marvel, and drop a 2 if you like DC better. We talked about comic book characters yesterday. I'm just trying to see who's still alive. Oh, we got a 3. Yeah. Charlotte's like, man, comic books, whatever. So yeah, I'm a Marvel fan. I'm a nerd, right? I'm a nerd. It's a beautiful time to be a nerd. And I'm a tax nerd. So here we are. We're talking about the board of directors as a tax strategy. So when you set up a corporation, when you set up a S corp or an LLC or C corp and then make the S election, S corporations require officers, right? That's your CEO, your president, your VP, your treasurer, your secretary. Well, that all of those roles can be filled by one person. Doesn't have to be separate people. People form a corporation. They're like, can we make my mom my secretary, or I mean, she's the CEO of my life, right? So, or my wife, how does that work, right? So those can all be you if you're a solopreneur and you have just you. It doesn't have to be anybody other than you. But when it comes to a board of directors, your board of directors are not officers of the corporation. They're not legally listed with the Secretary of State. There are additional roles in your company. And so, what is a board of directors? A board of directors is an advisory or support team, right? These are folks that serve basically, or should serve, 3 essential functions. One, they should help you set and achieve strategic direction in your company. They should advise and support you on how to achieve goals for your company, and they provide support for helping you bolster your appropriate corporate governance. What does all that mean? Okay, so a board is, again, not officers of the corporation, and this is important. I'm not an attorney. I don't pretend to be one. We're talking about legal stuff. My understanding is that your board of directors are not legally liable for stuff in your business. If shiz happens in your business, they're not liable for that, is my understanding, if they're not actively engaged in your daily operations, right? If you're concerned about that, consult an attorney. But a board of directors can be a spouse. It can be a spouse. Can be an adult child. I would steer clear. We'll talk in a minute about a little bit deeper about who can be on your board of directors. I would steer clear of minors, unless they're 16, 17 and materially participating in your company. But a board of directors, like I have on my board of directors, a good friend of mine who he has a consulting business, right? He does business consulting type things. And I don't do I do tax consulting. We do tax mitigation and tax consulting for people, but we have related interests. And so we like to get together periodically and have meetings and say, hey, what can we do to increase our business, do some strategic planning. So that is somebody that I would say is a good strategic referral partner who I like to go do stuff with. I like to spend time. We go play pool and hang out. But what are we going to do together, and could we do a retreat style thing? So a board of directors can be somebody that's going to materially help you grow your business. So the other piece of a board of directors, having people on your board of directors, would be, again, the corporate governance. If you look at Amazon, Google, like the big players, they have board of directors. They have people that are not engaged in their day-to-day operations that come in periodically, and they have meetings and they talk about the direction of the company. They talk about goals. They talk about strategic objectives, right? And where do they hold those meetings at? Well, I know of several large companies that rent homes in Malibu or Hawaii, Hawaii, or I'm thinking of like Malibu, California, Southern California or Monterey. They go rent a large home and they get away from the office. They bring everybody to a kind of a secluded place, and they have a mastermind. Hey, put your phones in the box at the front of the door. We're gonna go technology free for the next 3 hours and just pen and paper and talk about the business. So when you have people involved in your business like that, now you have an opportunity to do some retreat style, location style, destination style meetings, right? That's legitimate. Big, again, big companies, big corporations, and smaller, like you and I, do those things, are allowed to do those things. The number three reason, and I love this one, that it's a good idea to have a board of directors is to combat loneliness. And this is important. The Stanford School of Business in 2013, I think, did a survey. They surveyed over 500 CEOs and executives, business owners, and the number one struggle that business owners face, that these executives and CEOs, was loneliness and isolation. That was the number one struggle. And I'm a huge advocate for mental health in general, and especially mental health for the entrepreneurial community. The struggle is real. It's lonely at the top, right? Those cliche phrases exist for a reason, but it's lonely at the top. And when you're struggling day in and day out to be the chief cook and bottle washer and grow your business, that can be daunting. So collaborating and pulling in other people that aren't partners in your business, but have a vested interest in you and growing and saying, hey, let's grow our businesses together. Let's support each other together. That's a phenomenal way to say, hey, let's do some strategic thinking. So board of directors, you can build a team of advisors. Again, there should be legitimate, like they should be in the boat rowing with you in the terms of helping you set growth trajectory and patterns. And people who should not be board of directors, again, these people are not officers of your corporation. Um, so minor children, I would avoid those. I would avoid, direct competition. You probably don't want direct competition unless you're, I see some people that are insurance agents and brokers or real estate agents, or, hey, I only handle commercial properties, you handle residential. So, there's some cross pollination there that could happen. Those are some exceptions. I have a guy who he has three companies, but he's like, I don't touch. It was HVAC. Like he did home services stuff, but he's like, I don't touch HVAC. I don't touch solar. So he would have people participate as board of directors members for him that were owners of companies like that, and say, hey, come to this location and let's unplug for a day or two and talk about how to grow our businesses, right? Spouse, business partner, we talked about other self-employed people, key employees. The guy I talked to yesterday, where we're saving him north of $53,000 in taxes. He's like, yeah, this is the first day I'm kind of back in the office after for the new year. It's good to be back to work. And I was like, oh, cool. And he talked about he had his number one guy is kind of supervisor guy who runs things when he's not there. I was like, oh, that would be a logical choice of somebody. He's like, is that person an integral part of your business? He's like, yeah. So that would be a logical person to say, hey, let's install that person as part of your board of directors. Cool. Any questions so far? Am I still who put a in the chat where you think you would want to take your board of directors? What's a destination place that you or where have you gone and taken your board of directors? I want to see if people are still awake. This is tax stuff, so I want to make sure people are still with me. I'm kind of shooting for Bora Bora, like hut over the water. That's like that's my bucket list. I want to get some amazing people to a really dope place like that. And I see Hawaii, I see Nashville, Italy, love that. Awesome, very cool. Japan, awesome. I'm actually going to Japan in March, honeymoon, so very excited. So awesome stuff. So when you have the installation of your board of directors, right? Again, because the board is not a officers of the corporation. Your board is not officers. So how do you designate? How do you do that? Well, it's an internal document. What you do is on your with your corporate governance, your corporate compliance, you install your board of directors, you officially invite them and say, hey, come to a meeting and we're going to name you in our meeting notes. And then they actually sign off on the meeting minutes, right? Which leads people to say, hey, do I need to have my board of directors at every corporate meeting? There's some meetings where maybe I'm deep diving into like personal stuff with the business that is nobody else's business, pardon the pun. No, you don't. You can say, hey, you can designate corporate compliance meetings for certain days or for certain meetings of the year. Say, hey, we have 4 meetings a year, 2 of which are board of directors meetings, right? We're going to set goals, and then halfway through the year, we're going to have an accountability meeting. Say, here's where the business is at goals wise, and here's where maybe can help me get unstuck, guys and gals. How can we make this better? So that's really how you do that. Avoiding some pitfalls, you should really pick your board and be consistent. You don't want to have a carousel of people just kind of revolving through your door. You want to keep it, you want to be somewhat selective, or not somewhat, it's your business. You want to be selective about who you invite in. And you need to make sure that there's legitimate business being done with your board of directors and you're actually leveraging their knowledge. So remember, I said earlier, vacations are not tax deductions. However, travel, if it's structured properly, can be. So, uh, John said he's leaving for the Bahamas with the board today. So, thank you for being here. You're headed to sunnier places than I'm currently located, which is amazing. So that's awesome. So here's how you turn your travel into legitimate tax deductible travel. The IRS requires a work day of 4 hours minimum. So if you travel, you need to call it a day and say, hey, we're having a board of directors meeting and we worked on these days, to have it count as a work day, it needs to be 4 hours. Well, the way I would like to structure that is I would pre-schedule and say, hey, board, FYI, we're going to travel on a Wednesday. We're going to get there. Wednesday's travel day. Thursday, we're going to do half day, jet lag or whatever, kind of chill in the morning. But in the afternoon, we're going to get together and we're going to have kind of a working session a couple hours before dinner. And then, hey, we're going to have dinner. During dinner, we're going to continue the conversation. So we're going to meet that 4 hour minimum. Business gets done over meals. That's fine. You just want to have somebody designate the agenda and kind of do a recap. Hey, thanks everybody for coming to dinner. So here's a toast to safe travels we all got here. And, Bob over there is the one that took the notes. So Bob, if you wouldn't mind just doing a quick rundown of the notes that we talked about, what we talked about today, and then also give us a preview for tomorrow. Bob, take it away. And then Bob can, punch through the list and say, here's what we're doing tomorrow at our workday. So then the next day, and I'll give you an example, I think coming up in the slide. So bottom line, you want to document the work that's being done. You want to communicate ahead of time and say, hey, this is a trip. We're going to have some fun. We're going to go zip lining through the jungle or whatever that is. But we're also going to have some working time. So come prepared and be thinking about these topics. Document the expenses, and then after the trip, follow up. Like, hey, we did some meaningful things for our business. So let's follow up and make sure that those things happen. So board of director meetings can absolutely happen at destination type locations. I saw Hawaii, Italy, Japan, like some pretty exotic and amazing places. Um, at the end of the day, making sure that you document and verify that the 4 hours a day is happening. Conventions. I absolutely love this. And I tell this to business owners, and they're like light bulbs going off, ding, ding, ding. Conventions are Orlando, Hawaii, there, Vegas. There's destination type places are popular for conventions, right? They want to have people come to the retreat and participate in the convention or training or seminar or whatever. So take your team to a convention, but then tack on an extra couple of days. Like say, hey, we're gonna be there. We already paid for the airfare to get there. So let's tack on an extra 2, 3 days, include the weekend if there's a layover day. And so maybe it's 4 or 5 days, and take some time off, but say, hey, we're gonna take what we learned in that really dope convention, that really amazing training that we had, and let's all powwow and sit down and circle the wagons and say, hey, what did we learn? What are we going to integrate? Right? I go to conventions and I come back with notebooks full of stuff, and I'm like, it's amazing. And then life hits and I'm like, oh crap, didn't do any of the amazing things that I learned. Right? So that's a great way to extend a trip and say, let's make sure that we're implementing the information. So again, before that conference, you should say, hey, we're going to go to this conference. I want you to be thinking in terms of these things and set the agendas for what are we going to do? What are we expecting to learn? What do we want to do? And let's be prepared for these meetings after the fact. Questions, thoughts, use the Q&A, use the chat, hit me up. I see some things. Aaron asked, hey, could zip lining through the jungle as a team building exercise be part of that? The great question. The answer is under current law, no. Here's why. Entertainment currently is considered not deductible. That is set to expire, I believe, at the end of 2025. That would be considered kind of an entertainment um, exercise or piece of that. The common example when it comes to entertainment is, hey, we're going to go to a baseball game. The cost of the ticket, the baseball game, is not tax deductible, but the cost of the meal, the beer and the hot dog that I get, is tax deductible. Those are the rules at the moment. But if you say, hey, we're going to travel and be able to deduct our airfare and hotel in full as a tax write-off, now you've freed up some tax dollars to say, hey, we can pay for some things that are not tax deductible. So great question. Any other questions, thoughts? Raise your hand, put it in the chat, Q&A. I'm going to move forward. Oh, is there a limit to how many days you can take your board of directors on vacation? That's a great question. So there is no limit. Reasonable judgment. I always say pigs get fat, hogs get slaughtered. So, at the end of the day, use judgment. And, if you're extending a trip, if you're saying, hey, we're going to go on a week and a half or 2 week trip, maybe some of those days are you're saying, hey, we're going to be fully unplugged, not going to be doing any work stuff. So you at that point allocate the personal time out of the cost of the trip and not deduct that. Layover days don't count as work days. So that means travel days, for one, you're traveling to get to the destination, to get to the meetings. And then at the end of the day, or at the end of the week, Saturdays and Sundays are non-working days. The IRS, believe it or not, they have some sort of a soul, right? They don't expect you to be slaving away 24/7. And so you get weekends off. So if I go to a conference and the conference ends on Friday and we have Saturday, Sunday. Instead of flying home on Saturday or Sunday, I'm going to fly home on Tuesday. I'm going to have a weekend off in the city that I'm in Orlando is a popular place, or New York, or wherever that conference is. I'm going to kick it around, do some sightseeing, go have some fun. And then on Monday, we're going to be back to work for at least that 4 hour minimum. And then, hey, we're going to kick it out and take half the day off. Time off is really valuable. Business coach Dan Sullivan talks about offline time and how important it is for entrepreneurs to take time away from the business, because when you're not engaged in the business, your brain, we have a hard time shutting off our brains, right? We're thinking about our baby, it's our business. And so when you're unplugged and doing other things, taking some time off, that's when kind of that magic can happen. And that's really the value, I think, of the board of directors, is if you can justify this and say, hey, let's go somewhere, work half a day. We're going to work hard, document what we do. Let's go chill. Let's go take some time and just engage, and then have some R&R. And then as that happens, conversations might happen, and then come back the next day and be like, hey, this hit me, this hit me, this hit me. And I've been in rooms where light bulbs go off and amazing results happen. So that's a great question. There is no real time limit, but be reasonable and don't say, hey, we're going to take, 25 days a year or a month off on our board of directors. I'm not a baller, so I can't do that yet. But any other questions? Great questions, great thoughts. We're going to move on with the accountable plan. So I'd like to introduce you to the accountable plan. So we're talking about travel. We're talking about some of it could be tax deductible, some of it couldn't. So that begs the question. We're like, okay, we just set up our board of directors. I don't want to put them on payroll. So how do we, or maybe you do put them on payroll. There could be reasons to say, hey, let's throw them on some payroll for their time. But you don't have to. So what is an accountable plan? Well, an accountable plan is an arrangement to reimburse employees or people affiliated doing things for your company for work-related costs. And this plan meets the IRS requirements. If it meets the IRS requirements, those reimbursements are tax-free. They're non-taxable income. Did I capture your attention there? Tax-free, non-taxable income. Who likes that? Put a 1 if you like tax-free income. Put a 2 if you're like meh. So at the end of the day, here's how that works, right? We're going to take an employee who works remotely. Maybe you work for your corporation as an S-Corp owner, right? So you work from home and you have home internet. Well, my home internet is shared with teenage stepson who's in school, and he's playing Fortnite and video games when he's not studying. Cool. My daughter's playing, watching YouTube, kids and different things, right? So not 100% of my internet's used for home, but for work, but a lot of it is. So the business is going to reimburse me for the business portion of what I determine is reasonable. For our internet and home internet, right? The business is going to reimburse me for the cost of my desk and the equipment that I personally have or my employee has already that I didn't buy, but that depreciation allowance should be taken and accounted for. And then the home office, as far as, hey, utilities, rent, or portion of the mortgage, allocating a portion there. So if you look at that, I just want to call attention to that home office cost, right? We put $216 in January, 327 in February, and 297 in March. Why do you think the difference? Why do you think the difference in the month to month? Why would I be reimbursing? I want to see if you're want to poll the audience. Who thinks that the reimbursement, why that is fluctuating up and down? January, February, March. Yeah. Aaron's in Ohio, I believe, right? Utilities are higher because of weather. Exactly. So here's how we avoid your tax-free reimbursement becoming taxable income. We want to avoid the appearance of rent. If we're doing a reimbursement and we're just saying, we're going to do a flat $600 a month, that's not a reimbursement. That looks like rent, right? That's a rental agreement. That's a rent range. I pay you a flat amount, and then you as a landlord figure out the variability of your life. Good luck. I pay a flat amount of rent. So if we're doing a reimbursement, we're doing a true reimbursement of the costs that are actually allocated to business. And a reimbursement is tax free. Rent, if it's over the amount of uh, if it's over 14 days a year, we'll talk about that with the Augusta rule tomorrow. But rent is not tax free if it's over 14 days a year that you're collecting rent or receiving rent for. Somebody asked, can I deduct the cost of snow removal since I have a home office? Yes, not 100%. We'd have to allocate a portion of that based on what is the business portion of that. So that's more of a one-to-one conversation, Aaron. Let's have a offline conversation about that. But the bottom line is, great question. You can reimburse for a percentage of utilities, your rent, your mortgage, your maintenance on the home, landscaping. We figure out what the business percentage of your home is and then reimburse for that. That's how we do that on a monthly basis, ideally monthly. But if you look at this employee has almost $1,200 per quarter. That's about $4,700 for the year that we pulled out of the business tax free. So if you're looking at employees and you want to give them a raise, how about we give them a raise by implementing some reimbursement policies and say, hey, we're going to reimburse you thank you for working for us. Thank you for being all hands on deck for my business. I'm going to make you whole for some of your cost of living items. Guess what? Those reimbursements go to your employees income tax free, payroll tax free to you, and doesn't affect your workers' comp insurance. Reimbursements are an amazing way to go. So the power of tax free is it gives your employee and you as an S corporation owner, as we established yesterday with the reasonable compensation requirement, you are an S corporation. As an S corporation owner, need to be paying yourself a reasonable salary, and you can qualify for these reimbursements. So again, for the employer, it's great because you can reimburse and have those reimbursements be income tax free, payroll tax free, and not impact workers' comp. And for the employee, you're making them whole for some of their cost of living expenses, some of their things that you can say, hey, you're paying this. I want to help pay your bills reasonably. What is the portion that is business percentage? So the fine print on this is you should, I say must have. The IRS does not technically require you to have a written plan. But if you have a written plan, it's going to give you that much extra layer of protection. We have a template for you that you can use as a written plan for your accountable plan. The expenses must have a clear business connection. So you can't be like, hey, I'm going to reimburse you for your grocery bill, or hey, the business is going to pay for my, my grocery bill this month, right? Now, if you go out and you have a meeting in your home and you go and buy breakfast foods like where you do waffles and eggs and bacon and all that good stuff, right? If you are cooking for your team, the business can buy the food that you're cooking for your team. So, if you have a barbecue, you're like, hey, I'm having my employees over, or I'm having a networking event, the business can absolutely buy the food for the event. So I'm not saying that, can't ever deduct food, right? But there's got to be a clear business connection. It can't just be I'm buying groceries for my family. The reimbursement should happen also, or must happen within a reasonable time, right? Especially if you have employees. You shouldn't expect your employees to float costs for an entire year. Like, hey, we're going to do it once a year and we're going to only reimburse in December if we feel like it or if we need the tax write-off. You really should be doing it on a quarterly at minimum basis. The IRS guidelines are actually like 60 days. You shouldn't let it go more than 60 days. And this is where people are like, this is a pain in the butt, right? You have to account for the expenses. So the written plan, we have a sample accountable plan. I'm going to give you a playbook for the accountable plan here in a minute. And you really should, we talked about safeguarding, only reimburse for things that are legitimately business expenses, reimburse them on a timely manner, and reimbursing with accounting. So you got to do the accounting part of it. So common expenses of what can be reimbursed: home office, travel, phone. You can deduct, you can reimburse employees for phone lines. Obviously, licenses if they need to pay for a license individually or you're not covering it directly through the company. Any tools, supplies, training, dues, subscription, and then there are some per diem things that you can do. Check out the playbook for more information on that. But again, there has to be clear and bona fide. I love that. It's very fancy. Bona fide, legitimate connection to business expense, business reason for that expense to be incurred. Okay. Pitfalls to avoid when it comes to accountable plan and reimbursements is entertainment. Avoid entertainment expenses. Avoid personal expenses that are not related to the business. Avoid giving gifts or saying, hey, we're going to give gifts in excess. Technically, it's a $25 per year limit. Technically, there's some ways around that. Legitimately, we're raised around that. And then avoid reimbursements in excess of the actual amount, right? If you are saying, we're just going to round up, that rounding up over the actual dollar should be considered compensation to the employee, or could trigger, putting you into a rental situation where the IRS, if they look at it, they can say, oh, you're paying them rent, right, for use of whatever. So avoid that. We talked about the 60-day or less, thing, and I always say, sex sells, right? Let's try to keep it PG here, but hey, sexy part of all this is the accounting, right? Filling out expense reports. Said no one ever, that's not sexy, right? But at the end of the day, folks, you got to do the work. Like, the magic you are seeking is in the work you're avoiding. I don't know who said that. I've been searching for who. If anybody know who said that, drop it in the chat if you know. But at the end of the day, you got to do this, the component of the record keeping. But you can do that in a way that you can automate it and spend, let me ask you this: 30 minutes a month, is that worth 4 or 5 grand a year taking out of your business tax free? Is the juice worth the squeeze? I would argue yes, absolutely. So with that, trouble happens when you fail to document these things, when you're not keeping up on it. So allocating that time and saying, hey, let's make sure that we do these things the right way. Questions, thought. Is this useful? Does anybody put a 1 if you have an accountable plan in place, or if you've heard of an accountable plan? Let's say put a 1 if you have an accountable plan in place. Put a 2 if you're like, nope, but I like this. Let me know what you think about this. Thoughts, questions. Let's see. If somebody said, if we gift above the giftable amount, can we deduct the get up to the giftable amount? Aha. So let's say I buy $100 gift. Can I deduct 50 of that? Yes, that's a great question. Yes, you can. And there are ways to, depending on who you're gifting that to, and the especially in the real estate business, like, you give somebody a move-in gift, right? Hey, welcome to your new home. Find creative ways to brand. If you give people branded items, where every time they look at that, they're going to be like, oh, that's Chris. Yeah, that's totally, like, that came from him. Those are items that are 100% deductible. And if you sneak in and say, hey, we're going to create a package with some other things in that, that could legitimately be called marketing, advertising, branding. So, all right. Remember this little gem, the taxpayer roadmap. Anybody ever seen this before? Put a yes or no if you've ever seen this before I showed it to you either yesterday or today. That little gem of roadmap of confusion, right? So we talked about board of directors. I gave you some, like, here's how you install your board of directors. Here's a accountable plan. Cool. Like, okay, so what do we do with that? So this is where, and we are on a mission. Like, yeah, there's a fire under me to fight fire with fire. Let's put out your dumpster fire of tax problems and we appreciate that you focused in on this, and hopefully you've seen some impact. But the opportunity I feel is lacking. There's a lot of great people on YouTube or TikTok giving great tax advice that some people are, you can't do that. Well, actually, you can, but they don't really give any clear steps on how you do that. So, thank you for being here today. As a gift to all of you, whether you're watching this live or getting the replay later, we have a board of directors document on how to install a board of directors, the steps to take to legitimize your board of directors. And where is that found? You guessed it, in our free community. So maketaxesfair.com/community. And I'm going to take you to that right now. We're going to go into the tax strategy focus system. So if you go into the maketaxesfair.com community, can everybody see my screen? Should see a bunch of like put a yes if you can see these little blue, red, gray. Yes, perfect. So you're going to find this in our community here, and you'll go to classroom right at the top, and you're going to look for workshop. And I've already got, I'm going to make that live right now. So day two is the resources, board of directors guide, and accountable playbook are already there in the classroom. The replay of this, once it finishes rendering the recording, I'll be slapping that in there as well. That is where you go to get these. So in this guide for the board of directors, you're going to say, why you need a board of directors, how to pick who for your board, how to pick the who, how to plan the meetings, how to document travel for meetings, and give you a checklist for optimization. Is this helpful? Give me a heck yes if it is, or meh if you're like, whatever. It's taxes. Who cares? I care. So our second gift for you, and this is for you being here and or watching the replay, is that accountable plan. So we're going to give you a guide for how to set up an accountable plan and some checklists and resources as a part of that. And there's an additional training that I have online as well. And second gift, I'm an accountant. I can't talk. I can't count apparently. So it's not the second gift. This is the third gift. So if you're live and here today, I'm going to take a screenshot here in a moment. We're going to give you a personal strategy session with me or a member of my team. Taking the screenshot now for who is attending live. Folks, this is something that we charge for at a rate of $400 an hour. We don't do a la carte pricing. We don't meet with people one-on-one. We have kind of packages that we base, but we're here to help, and we're grateful that you supported us. So if you're here live and you came today, we're going to give you a hour session with me or a member of my team that's tax strategist. And we'd like to keep it to, what we've talked about, because you've received some education around the compensation study, the S-Corp questions, board of director accountable plan. But if there's other things you want to discuss, we'd be happy to have that conversation. So thank you for being here and supporting. That's your gift for being here live and part of this live and unscripted event. If you're watching the replay, still connect and get those things. If, as an FYI, we have our free, the replay for this is housed in our free community. We do have a paid version of the community, and people that are joining our VIP community this month get a free tax strategy session when you join our VIP. There's other goodies that you get when you join our VIP community, including if you join our VIP community, you get a free compensation study, and then you'll get a free session as part of that. Currently, we're at $49 a month on that VIP group. So if you want to check out more information, if you're watching the replay, if you're watching this replay later, that VIP group is going to increase over time as we grow that community, and there will be more kind of goodies that we'll be adding to that. But bottom line is, if you have found this valuable, you can check the replay. You can get all the resources right there in the community right there is the downloads. We're going to do a sneak peek real quick, and then I'll take any questions. So tomorrow, we're going to talk about the Augusta rule. Who has heard? Yes, put a yes if you've heard of the Augusta rule. Okay. Uh, Heard of it. Okay, good. Who is actually executing the Augusta rule in their taxes? That's the where the rubber meets the road. I do presentations and conferences, and there's 300 people in the room, and I'm like, okay, probably 50 hands go up that they've heard of the Augusta rule, and I'm like, who's actually doing it? And there's like one, two people in the room that they're like doing it, and then I'm like, okay, I'm gonna put you on the spot and ask them a couple questions. This is a really powerful tax strategy. We're going to talk about that in depth tomorrow. So you're going to want to be here or check out the replay. We're also going to talk about that clear edge and kind of tie it all together and say, okay, we've talked about some legal things, some tax, some deductions, optimization, employees. So we're going to bring it all together with the tax strategy roadmap. There's going to be some more freebies if you come manana. So join us tomorrow. Any questions, any thoughts? You guys have been great. And my ask of you, and I actually put this in the replay place. Do you have friends? I have friends. I hope you have friends. Entrepreneurship is lonely. If you have friends, folks, here is, if you are here, there's still day number 3 tomorrow. People can still register and join. They can register and get the emails for here's where you find the replay. But share this because, as we like to say at Make Taxes Fair, friends don't let friends overpay the government. So we put some links and information in there. If you feel like this has been valuable, and I would ask you right now, has this been worth, we're not quite an hour and we're going to keep it less than an hour, keep it tight. Has this been valuable today? Have you learned something new? Put a yes if this has been valuable to you. Awesome. If this has been valuable, I'm going to introduce you to something called, I'm going to stop sharing my screen. If I come up to you and show you this red card, I don't say anything, and I just show you the red card and slap you in the face, what would you do? Put it in the chat. What would you do? Come up to you, red card, and then whack, slap you in the face. Oh, punch me. That's a good answer. Probably punch me. A lot of people would just be like, oh, what just happened? Like, no warning, nothing. Like, what just happened? Cry. But if I walk up to you again and show you the red card again, I don't say anything, show you the red card and slap you in the face again, what would you do? Punch me harder, maybe? Duck, bob, weave a little bit, hopefully? Folks, this is what happens when we attend things like this. We learn something really dope. We learn something really cool. And then we go away and we don't do anything with it. And so at tax time, the IRS comes up to us with the red card of our tax bill and smacks us in the head. I just gave you a green light. I just gave you a green card and said, hey, this is a way that we can go this way instead of getting hit at the stop sign with the red card. So we provided you with some information, gave you a taste of here's something you can do. But Alex Hermosi, he says, he uses the red card slap. He's all, if I come up to you and do this, you learn, you adapt. You say, okay, I'm not going to, if I see the red card, I'm a Bob Weave, do something different. But if we leave here and don't do anything different, how intelligent are we? He said that, and I'm like, he said it in a lot more direct way. I was like, whoa, that was okay. How intelligent am I if I learn something but don't do anything with it? So knowledge is not power. Knowledge applied is power. We put together some resources. We invite you to share those resources with your self-employed friends. Share them and say, hey, I'm doing this cool thing. You should check this out, and we should do it together. Build in an accountability partner to help you do it better. I am grateful that you were here today. We're going to keep this tight. I promised each day we'd be an hour or less because your time is valuable and you got stuff to do. So thank you for being here. We appreciate each and every one of you, and look forward to seeing you inside of the community with questions and If there's nothing else, I'm going to stick around for just a moment. I'm going to end the recording and appreciate you all. Make it an amazing day. And if you can't be good, be careful. I'm going to end the recording now.